on the other parts of this, because if you'll remember that you're an insurance agent, your job is to help your clients with their insurance needs. And so part of what I want you to do is recognize that it's your obligation to ensure things for your clients. In other words, if you went into a home, or you're talking to a client and they need a final expense policy, they need life insurance, and you don't offer that to them, and someone in that home were to die, would you feel bad for that? Yeah. Would you feel like you'd missed your obligation as an agent to be able to provide better for that spouse, that family, so that their burial needs are met? And so part of that is your obligation, but it's a privilege, but it's an obligation. When you're there, we need to help people understand the value of insuring their lives, even if it's just for the sake of a burial plan. And so the same thing I say is that I'm an insurance agent. And I'll give you a couple of things to jot down before we get going on this. But if you'll understand that as an insurance agent, it is your job to insure their retirement account. So and you can use this as the follow-up transitional statement after you make your other sales. Oh, by the way, is your retirement account insured? As an insurance agent, I insure retirement accounts. I insure lifetime income that you can never have go away. And so as an insurance agent, I insure retirement accounts. And so if you understand that obligation, that role, that responsibility, the first slide that I'll show you next time, I always say there is one rule and only one rule. If you would write this down, I would appreciate it. One rule when it comes to retirement accounts: do not make it complicated. Do not make it complicated. A lot of the reasons why you don't sell and don't offer retirement accounts is, well, I don't understand them. I don't know what I'm supposed to do. It seems complicated. Well, that's on you. This is insurance for retirement accounts. You gave insurance to them for their death. Did you insure their retirement account for their life, for their legacy, for their income, for their next generation? And so it's important that you understand the responsibility of insuring that retirement account, and don't make it complicated. So we'll hit that again next week. But I have literally used this presentation that I'm going to go over with you today, sitting in the home with a client who was 40 years old, had an old 401k. I said, just so you know, all my clients retire in style. He says, well, what does that mean? And I said, well, I'm glad you asked. This is what I can do for your retirement account. And so this is the acronym that we can use sitting with a client, talking on the phone, whatever, to be able to help them understand what you do as an insurance agent. That's all we are doing, is insuring a retirement account. So the S stands for safety. Are you able to see that okay, Misty?
Yes, sorry.
Yep.
Okay. Okay, just want to make sure it's coming through okay. So safety. So one of the things about insuring a retirement account is that we will never put it at risk. We'll make sure that it is protected by insurance from an insurance company. Now, when we think about safety, if we're going to think about the safest money on earth, most people would think about a bank, okay? So I can go to the bank and that's safe. And why is it safe? most of the people will talk about, well, I want to put it in my bank because it has FDIC. Anybody know what FDIC stands for?
I know it means it's insured.
Isn't it federal something insurance?
Federal deposit.
Federal
Insurance Corporation.
deposit. And what does the I stand for?
Insurance?
Insurance. And so think about this. What you're telling me then is that you're trusting insurance through the bank for your money. Now, also note that what you're trusting is this first word is federal. So you're trusting government to insure your money. What if we bypass the federal and go directly to the insurance company and insure your money? Does insurance pay its claims?
Yep.
Can you think of any time in your life where you wrote a life insurance policy and that insurance company did not pay the claim? Even if it was $1 million policy, has the insurance company ever had to call Mrs. Smith and said, hey, Ms. Smith, we're real sorry that your husband passed away. If you'll give us a little bit of time, we're going to try to raise a little bit of money. We really weren't expecting him to die, to be honest with you. We thought he'd just live forever. And so we're going to have to raise a little capital to get that $1 million so we can write you a check. Or the same little lady driving her car down the street runs into a mailbox. Well, it's her brand new Cadillac. The insurance company going to call her and say, hey, Miss Smith, sorry about the wreck. That was a little bit more damage than what we were expecting. So we're going to send out this little bicycle. If you don't mind biking around for a couple of months, we're going to see if we can raise some money so that you can get that new Cadillac repaired.
Yeah.
That doesn't happen, does it? Insurance pays its claims, no matter what they are. And so you want to say, I'm going to trust the government to insure my money. So if that bank, now, I don't know, do you ever hear of any banks folding in the first place? Maybe we don't even have to worry about that. Anybody ever heard of a bank folding? Anybody know of any big banks in the past year or so that have had problems that the government had to get involved with?
Some bailouts?
When there one in
Yeah.
California in the last couple of years.
Oh, yeah, that's right. The Silicon Valley Bank. They're a monster bank in Silicon Valley and they're having problems. And so guess what? It's not a big deal. Those clients, they are insured all the way up to what? $250,000 in the richest part of the world. And so all they have to do is go get into the government line with all the other clients and try to get their money. How do you think that's working out for them? And do you want to stand in the government line to get your money? So what happens if you give your money to an insurance company? Now, this wasn't necessarily where I was going to try to cover today for you, but let me give you a quick note on reserves, okay? If you took $100,000 to the bank, how much money does that bank have to keep on hand to have your $100,000 in their bank? Anybody know?
$100,000.
What's that? So
It's
let me
a
ask
small
you this.
percentage.
Let me ask it this way. If you gave them $100,000 today and you went back tomorrow and asked for your $100,000 back, would they be able to walk into a vault in the back of that bank and bring you your money?
Sure.
Nope.
No.
No way.
What would they tell you?
48-hour to 72-hour turnaround.
Yeah, we're
Daily
gonna have
limits.
to get some money. We got to go get that money to be able to give it to you. A bank legally keeps about 3% on hand. And the average small bank will only keep total about $20,000. What are the mega banks keeping? Maybe $20,000 to $100,000 on hand. But if you give that same $100,000 to an insurance company, how much money do they have to keep on hand in reserves?
Enough
Probably-
to cover the death
Probably the
claim.
equal amount at least.
100% at least.
100%? How about 112%?
Hmm.
Now, we're not just making that up. You can Google bank reserves, insurance company reserves, and see what the difference is. So which looks like it's really a safer place for your money?
100%.
The bank or the insurance company? Well, it's going to be the insurance company. Now, we talk about safety from another standpoint, and we talk about risk. When you think about risk, well, banks have very low risk, right? So you're only getting your return, though, if you've got a savings account, probably all of you got a 1099 this past year for somewhere between 32 cents, $11.42, $15.18. Why? Because that's the interest credit that you received from your bank this past year on your savings account, right?
Mhm.
So when we think about the risk, it gives very low returns. There's the risk reward spectrum. And so with the risk reward spectrum, zero risk, which is your bank, and even bonds a little bit can be in this range. But when you want to think 0% returns down here, to get more return on your money, you have to go to the stock market. And so the stock market historically has averaged probably 7 to 9% returns. I don't know why they say that. I don't know why they don't just say it's 8%, but if it's 7 to 9% returns on average to be fully at risk, fully exposed. So what if we could create a product that was somewhere between 0 and the extreme risk of the market, and those returns would just be right around in the middle? We would call that where most people live. Misty, do you have a watch on today?
I don't.
Um,
I bet Nick does. Or
Nick,
Evan.
have you got a watch on?
No,
Nick?
no, I don't.
Who's got a watch on? Somebody.
I mean, I
a
got
watch
one
on.
nearby, but it's a digital one. Oh, no, it's dead.
All right,
Got
so
one on.
who's got a watch? Somebody tell me you
I
got a
do.
watch.
I have
Who?
a watch on.
Who does?
Rosie. Rosie does.
Who did?
Rosie?
Rosie. All right,
Rosie.
Rosie, show me your watch, Rosie. Where's your watch? Put it up to the screen there so I can see your watch.
Can you see it?
Yep.
Where you at, Rosie? Okay.
I'm right here.
Rosie, what kind of watch is that?
Smartwatch. Samsung.
Smartwatch. Now, is it the most expensive watch that they make?
It was last year.
It's not today. It's not the most expensive watch you could
No.
buy.
No.
Is it the cheapest watch you could buy?
No.
No. All right, now Misty, I know you've got a car. What kind of car are you driving today, Misty?
I have a Benz, a GLE.
A what?
A GLE Benz?
Okay, is it the most expensive Mercedes they make?
No,
Is it the cheapest?
no.
No. And you have the opportunity to buy those things, but we don't buy the most expensive and we don't buy the cheapest. Why? Because most people live right in the middle. And so that's what this is going to do. It's going to provide right in the middle, somewhere between the lowest and the highest risk tolerance, right in the middle. That's kind of where we live and work. That's where everybody is. They don't have the most expensive home. They don't have the cheapest home. Everybody just kind of lives in the middle. Now, sometimes you may have that person that's got billions of dollars and they don't care. So they've got the most expensivest of everything. Pretty sure there's a TV show about that, right? But most people live in the middle. And so if I can create safety for you, that's just going to give you a safe, and I always like this, no risk. And most of the time, no fees. Therefore, no worries. I'm going to create a plan for you that will have safety for your retirement account. Do you like safety at this stage of life for your retirement account? Is that what you're looking for, Mrs. Client? Great. Then when I get with my, and you can say this often, when I get with my, let's see where I can write this. I'll just write it here and then I'll have to maybe take it out. Nope, it's not working. So let's go back this way.
Rick, what did you say? You said safe, no risk, no fees, therefore no worries. I'm going to create a plan for you.
Yeah, so when I put together a plan for you, I will guarantee that it has safety built into it. So I'm going to get with my retirement income team. We are going to build a plan for you that will have a focus on safety, because see, when you're adding to your retirement account through the years, a little risk is okay because of dollar cost averaging. Dollar cost averaging. That's when the market's going like this and I'm putting money in. And so it's okay because some days I'm buying and the market's high, but some days I'm buying and the market's low. So my unit value went down, but my purchase power went up because I'm contributing on a consistent basis to this. And so dollar cost averaging can be my friend. But once I'm at the finish line and I stop contributing to this account, then no longer is dollar cost averaging my friend, because I'm not putting money in, I'm taking money out. Now, let me give you a little statement to write down. Retirement accounts have one goal in life, one purpose in life for a retirement account. I don't know how many of you have, how many are on this call are new to insurance? Let me see if I can put my little thing back up out here. How many are new to insurance? How many have been doing it for less than 3 years?
I have.
Okay. Steve, what did you do before?
I sold mortgages and real estate.
Oh, wow. Well, it's a good thing we met today, because that helped people just like you take your old 401k from your prior employer, get it insured, and prepare it for income during your retirement years. Has anyone helped you with your old 401k?
No, sir.
Do you have an old 401k?
I do.
Guys, I've been talking to y'all for 20 minutes, and I've been talking to Steve for 3. How long did it take for me to find money?
4 seconds.
Yeah, 30 seconds.
So do you understand, if you learn to ask the right questions and listen for the right response, I don't even have to ask him if he has a 401k. I assume he does because he worked at another company. So my question is, oh, it's a good thing we met today because I help people just like you protect and preserve your retirement account. Have you insured that account today? So now when Steve is contributing to that account, it's fine because it goes up and down. He's buying stocks when they're up, buying stocks when they're down, dollar cost averaging, and it goes in paycheck by paycheck with one purpose in life, and that is to fund his retirement account when he's older to supplement his Social Security, which was never intended to be his only source of income during retirement. Retirement accounts have one goal, one purpose in life, to supplement your Social Security in retirement, because Social Security was never intended to be your only source of income during retirement. So I want that to sink into your head. I want you to write those notes down. Social Security was never intended to be your only source of income during retirement. And that's the only reason why Uncle Sam gave you a tax benefit to fund your retirement account. This goes back, and I don't have time to go into this one today, but it goes back to 1935 when Social Security was enacted to help keep people from the rigors, protect people from the rigors of the poorhouse. It was never intended to be your only source of income during retirement. So during the 70s, when all of the pensions fell because Social Security or income is expensive, and so the pension plan providers weren't really prepared for the influx of all the baby boomers retiring in the 70s. And so all of a sudden now there's these problems going on. And so we've got a government steps in with ERISA, Employee Retirement Income Security Act. And so the whole point of that was to protect the pension plans, but also to establish a plan so that you now get to self-fund your own retirement account. And so Uncle Sam will give you a break, a tax break. Now, if you're self-employed as an insurance agent and that's all you do, then if you have your own business, you might be able to do a SEP or something of that nature. But otherwise, you're putting in $7,000-8,000 a year into your IRA, individual retirement account. Now, Steve has a 401k, so that's a group plan. If he still has it with a group plan, then do we want to trust an old employee that could go out of business, or do I want to move that money over to my own individual retirement account and get it insured? Now, you can do anything with it. You can put it into a bank, you can put it into the market, or you can put it with an insurance company. Well, I'm an insurance agent. I'm just here to protect and preserve the amount of money you can't afford to lose. And Steve, I've got something so good for people your age that you will not even believe it. It's so good. With no risk, no fees, and no worries. And we can stage it for your future that will be guaranteed better than anything you could ever even imagine. And here's the benefit, Steve. Not only is it a good thing we've met today because I help protect and preserve retirement accounts, but I can help you write your own and you can get your own commission. Or if you don't want to, I'll write it for you and I'll get your own commission.
Sounds good to me, Rick.
Sure, I'll take some commission.
Yeah, and see, imagine this, and again, I'm off track, and so we won't get through this presentation today, and we'll go back over it later, but we'll figure out how to do better next time I do a presentation. So Misty and I will figure something out on this. But bottom line is, the first part of this whole presentation is there's a lot about safety. And when I do illustration presentations, and we'll do one of those if we maybe in our fourth presentation training event, I'll show you how I present a retirement account and go over it that way. But I spend most of my time on the first couple of pages that talk about the guarantees of insurance. I don't talk about the upside. Now, I believe my upside is better than it's ever been. And I believe that my upside literally may be able to beat or at least compete with the market. And right now, with my caps being so high, I believe that over a 10-year period, I'm going to win that race. because I'm going to get 90% of the upside with 0% of the downside. And if that's the case, like right now, in my own personal account that I put with SILAC last year, the S&P returned at 21.3%. The credit to my account is 15%. And then if the market goes down, guess what? I locked in that 15% and I just get a 0 and I don't take the hit with the market if there's a 30% correction during this election year. So if that's the type of retirement plan you're interested in, Mrs. Client, I'll get with my retirement income team. And I promise that when we come back, the key element that's going to be built into your retirement account is going to be safety. Is that what you're looking for, Mrs. Client? Does that sound like the kind of plan that you need? Great. Then let me get with my team, and that will be the first thing that we'll do. Now, I'm going to run through the next. I'm going to hit these as quickly as I can, and then if we have to come back, we'll talk about more of these elements later. But the next thing that we'll do is we will make sure that it continues in its tax deferred status. In other words, there'll be no tax consequence whatsoever to ensure that retirement account. Steve, right now you are in a 401k. Your plan administrator has a form that we will request that will allow us to take that money from here and we will roll it over. Money can roll over once in its life when it goes from its group plan to an individual plan, okay? So we're going to roll it over, and we're going to roll it over to an IRA, and that IRA, we could place it with a bank, we could place it in the market with a broker, the McDonald's of the financial industry. You can go find the Edward Jones on every corner, and you can let him insure, take your money and have it at risk. Or we can place it with an insurance company and we can get it insured. Because they have one goal in life, that retirement account, that 401k, Steve, it's got one purpose in life, and that's to supplement your Social Security in retirement, because Social Security was never intended to be the only source of income during retirement. And so I will make sure that when we roll that over, we put it into an IRA within an insurance company so that it is guaranteed safe. And when we do that, it will simply continue its tax deferral status because the government built in to ERISA the rollover option that keeps me from creating a taxable event when it goes from the 401k to the IRA with the insurance company. So we'll make sure that there's no tax liability when this happens. The next thing is yield. And we will make sure that it has a reasonable rate of return on it. Over here in my little box of craziness, I did the little risk reward spectrum here. 0 is the bank. Over here is the market. And typically when we think about the market, we always think about the S&P. That's just kind of the standard of what people think about, right? So if the S&P is over there doing 7 to 9%, then if I could get your return that would be in the 4 to 7% range, would that be good? Now, we don't have time to do it today, but right now our rates are going to be anywhere from 4 to 5.25 on the SILAC products. Usually you can take that times 1.5%, and that's your reasonable rate of return. On a 4% return, that means we should reasonably be able to expect 6%. On 5.25, then that means I'm probably going to be expecting closer to 8% on average. Because the market hits 70% of the time, and if I'm buying the indexing with a 5.25 cap, pricing will make sense later. But just trust me on this right now, that if I've got your fixed rate is key, so the 5.25 can become 8 if I go to indexing. Then if the market only returns 7 to 9%, then why would I go to risk if my projections are the same as yours? Would it make sense? Why don't we just insure it? You're not going to beat me by that much, even if you do. And I believe right now with my caps, I'm going to beat you over a 10-year run if you have yours 100% in the market. If you'd have been all in on the market last year with the S&P, depending on the anniversary date, it was somewhere around 20%. Well, I got 15% with no risk and no fees. So when you get 20%, and then your broker takes out 1 to 2, 3% fees off of that, is your net going to be that much higher than mine? No. And I had no risk, no fees, and therefore no worries. Oh, and guess what? There's guaranteed income. So let's go to the L. L stands for lifetime income. Miss Client, here's what we're going to do. When I get with my retirement income team, we're going to make sure that your plan has safety built into it. I'm going to make sure there's no tax liability whatsoever. We're going to get you a reasonable rate of return, maybe even better. And we're going to put a little guaranteed lifetime income because remember, this retirement account had one goal in life, and that was to supplement your Social Security during retirement. So we're going to make sure that you've got an income option built into that. Now, if you don't need the income, we'll just take withdrawal options. And so you'll have some withdrawal options built into that. But we're going to create something that has a guaranteed income that is just going to be phenomenal so that it can supplement your Social Security during retirement, which was the whole plan and purpose of this retirement account. Now, we're moving quickly. Don't have time. Lifetime income, and we'll throw in liquidity because that is part of it. Sometimes they don't need it. And sometimes you'll occasionally find a non-qualified account. Non-qualified means it's not a retirement account. It didn't qualify to go into a retirement account, so it's not qualified. All other money qualified to be in some type of retirement account. And this didn't, so it's just in a savings account. It's an inheritance. It's a death benefit from a life insurance policy you wrote. So we're going to put that into something else, and we'll still defer it, but we maybe just want income, or we want liquidity instead of income. We've got features for that. So else for lifetime income or liquidity. E. E is the state advantages. So we always give this little fun example. Because y'all are on this call today, Heartland Financial Group is giving me a special one-time deal for each of you, okay? And because I like Misty so much, this is y'all's one-time offer to you and you only for today only, and maybe even an extra set of Ginsu knives or whatever. One-time offer. So today and today only on this call, you have an opportunity to get a $10 million policy. $10 million life insurance policy. It is going to be guaranteed issue. It is going to be guaranteed premium. And it's going to be guaranteed that the amount can never go down less than $10 million. It's going to be guaranteed that the premium can never be more than $10 a month for the rest of your life.
You got
So
to add,
$10 million.
oh wait, if you order now, we'll double it.
You're going to get the Ginsu knives with it, okay? But if you order now,
Call this toll-free number.
$10 million, guaranteed issue, no increase in fees or premium, no decrease in your $10 million of value. And so all of these, so many wonderful things built into this policy. Guaranteed issue. I don't care what your health is. Guaranteed issue. All ages are the same. $10 a month today and today only. How many of you would be interested in that policy? Everybody, right?
Mhm.
That's right. I forgot though, there's just one little caveat. The caveat is that the beneficiary has to be your most dreaded, hated, mortal enemy. Oh, did that ding mean you're out? So how many still want the policy if it's got to go to your most dreaded, hated, worst enemy in the world, even though it's only $10 a month, giving them $10 million? Do you want the policy now? No. Why? Because 10 million bucks ain't worth 10 bucks if it doesn't go to the right beneficiary. So here's what I promise to you, Mrs. Client, that when we write this retirement plan up for you, that it will go directly to the beneficiary of your choice. It will bypass probate, is what we say. Because we don't want judges and lawyers dictating where our money goes. So when I build this plan, I'm going to guarantee that it's got safety built in. You can't lose a penny, and very likely no fees whatsoever and no risk. No worries for you on your account. We'll give you tax deferral. There'll be no tax consequence to move this money over to the insurance company. Reasonable rate of return, a guaranteed lifetime income, and promises that it goes directly to the beneficiary of your choice. And then one final thing, A. A is for annual reset. They like to throw this one in here. Just, I don't know why, but that one got thrown in and somewhere in our discussions. Annual reset. In other words, we get to lock your gains in year by year. As I mentioned, my account's projecting 15% return this year. That is like a ratchet. It locks it in and can never go back. It just click, 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 lock it in, click, 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 lock it in, click, 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 lock it in. It can never back up. And so we'll make sure that all of your gains are locked in annually on your account. Ms. Client, does that sound like the kind of plan you're looking for your retirement account? Steve, does that sound like the kind of plan you're looking for your retirement account? If so, then let me get with my retirement income team. We'll put together a plan for you. If I call you back next week at 3 o'clock on Tuesday, would that be a good time for you? Great. Let me get with my team and I'll put together a plan for you. Now, if you get this concept, we haven't talked about a product. Did you need a product for any of this? No, because the concept of an annuity is safety, tax deferral, yield, lifetime income, estate advantages, and locking in our gains annually. That's what we do. When we insure retirement accounts, this is what we are offering. Style. All my clients retirement style. Sitting with a 40-year-old, I went over this. He said, great, sign me up. I wrote up the application. He never even asked what kind of product. He didn't know that it was an annuity until I brought back the presentation, sat it in front of him, went over it, and he still didn't care. This was what he cared about. You can do that with my retirement account? Yeah. And then right now, you're locking in the highest rates of return we've ever seen in the industry. Get it while it's hot, because I don't think these rates will stay here. Because if I can lock in these kinds of gains and show projections, we had a client get 30% returns locked in 1 year. If you can do that with safe money, why would you be at risk? Why would you put fees and craziness into your account? Are you going to beat my account by so much that you think it's worth risking it? So it's important for us to make sure that we understand the process of what this is. Okay, so that is style. That wasn't where I wanted to go today, but if our time is gone, that's an hour. So what kind of questions we got? Throw some stuff at me. I'm going to quit sharing my screen so I can see y'all's lovely faces again.
Hey, Mark.
Hey, can you hear me okay?
I can. I'm still on this other call. It's almost.
Gotta mute you, Lisa.
And you're unmuted.
There you go. I know.
All right. Okay, so who has a question for me? Anybody?
And Holly, you have one that I'm gonna have you stay on and go over with Rick after. I already told him about the one you have questions on.
Yeah, and I didn't get a chance to share my screen to show you. Let me just give you, and is it okay if I give them my cell number?
Yeah,
Okay, my cell number, you can jot this down, 913-909-6088. 913-909-6088. All right, and so you can call me anytime you're working on a case, anytime you got a question, client opportunities. We want to find money. So just refer to me, to Mark Cash, or refer to us as your retirement income team. Great, that's a great question from my retirement income team. Let me get with them. I'll put together something for you. Oh, we work with that all the time. You're the perfect client for what we do. Let me help you with that. I see Shonda asking, what is the minimum? Good questions. We can go down to $100 a month. But let me tell you this. Let's say that we wrote something for $100 a month, and I can pay you 100% of the commission for 1 year. Or 100% of the deposit for 1 year. How much money would you make? $1,200. You can't live on that. But I have the guy who hadn't been writing any annuities, final expense guy. His first case was a large one. His deposit, he sent me a picture and sent me this note, said $54,000 deposited into my account. Thank you so much.
that's beautiful.
Yeah, that's what I sent back to him. I said, I love it when that happens. That's a beautiful thing. And so I think the largest deposit I had into my account last year was probably $27,000 on one case that I wrote. So, that's not bad.
Yep.
I call annuity business, the writing, my side job. Because it's not, it's the main thing I do is this training. And then I am a pastor, and then I'm a father, I'm a husband, I'm a grandfather. And so grandkids are often at my house. So they get to come in and play on the screen with me when I'm doing my trainings, because I tell them they don't have to knock on my door. They can come in anytime. So kids and family, they get special priority, right? So it's not the most important thing I do, but it's one of the most important things I do. Because if I can make an extra $50,000 to $100,000 a year in my side job, then that's helpful. My wife and I have an agreement. I'm in charge of accumulation. She's in charge of distribution. And so it's important that I maintain my portion so she can maintain her job. And so it's just an agreement we have after 46 years of marriage. Tomorrow's her birthday, so she gets to do what she wants to do for that. So it's important that I have some success in my side job each year, because that helps. It just does to have that extra 50 to 100 grand per year. So that's kind of what I have, my target. I've got a couple of clients I'm working right now that came off of a med sup lead, and I wrote their med sup, and then find out that they've got $2 million in their retirement account. So if I can just get half of that, then that would be a really good year, right? So it's important that you just know that you're the best deal in town for retirement accounts. And if you do your job, your clients are better off, and so are you. All right, so I saw someone, I was back to $100 a month, but that's not the ones we're looking for. I'm looking for the Steve accounts that have an accumulation more than 100. 5,000 we can do, 10,000 is okay. The goal, typically more than that, is what we end up finding. And the average 401k is about 100 grand that we average coming into the account this year. I think we're averaging about 100. If you work with low income clients, it could be in that 30 to 75 range, but I write those all the time. I think the last one I wrote, let's say I had one issue a couple of weeks ago that was for 51,000. I wrote one last year for 5,000, just because client wanted to put some money aside. And so I said, okay, sure, I'll do that. It's better than a sharp stick in the eye, right? So if I make $500 on a sale, then that's fine.
Right.
So it says, can you do an annuity while they're still working at a company using the 401k? Can they stop the 401k and fund an annuity instead? All right, so in a 401k, anybody know how much money you can put into a 401k this year?
Like 16,000 and something.
It's 26, isn't it?
It's probably around 22, 23,
22,
I think, this year. And then if you're over 50, they allowed the $7,500 catch up. So I think this year for me in my 401k, I can put around $30,000 into it. And so you're much better off to be able to dump more money into your 401k. If you made 100 grand this year and you put 30,000 into your 401k, you only pay taxes on 70,000 this year, and you're building towards that. And what if they've got company match up to 5%? Well, that's another $5,000 into it. So now you're at $35,000. You can't ever beat 100% match. You're not going to make 100% on your money anywhere else. So keep funding your 401k. Now, if you've got 50 grand in there and you want to protect that, then maybe it makes sense. So how do we know if you can move your money? Call the plan administrator, and every plan administrator makes their own rules. And so everyone is different, and you must call on every account. I wrote one 4 years ago with a guy who had just turned 59. I said, he said, man, I got to start protecting my money. I just lost a bunch and I don't have that much. So went over and started to write up the application, said, hey, let's call the plan administrator real quick. Make sure they're going to let you move this. Called them. They said, let's see. Okay, Dave, he's 59. Nope, he can't touch this money until he's 59 and a half. Came back in 6 months, moved his money. And so that was right before the market crash. He loves me. And so it's important that you recognize great opportunities are there, but we have to call the plan administrator on every one of these cases. Now, I will say this. I'm actually going vacationing this year in Georgia to the estate of one of my clients, or one of my agencies that I trained. They were final expense agencies, writing life and things like that, never wrote annuities. I think in the past 4 years, I probably made this agent, the owner of the agency, just her alone, her business, I probably made her an extra $750,000.
Wow.
She likes me. I'm going to her estate, the Callaway estate, this year for our family vacation because she wants me to come. She likes me because I taught her how to take the same client she's already seen and to insure the retirement accounts. She says, I don't think there's that much money here. I said, there's money under every rock you kick. You just had to be mindful of it. Just like with Steve, it didn't take long to talk to Steve and find that he's got money. All I'm looking for is somebody that's quit their job, changed their jobs, had an old job that they worked at, changed career paths, find a senior that's getting ready to retire, they're near retirement. All these things are just part of it. That's what we do. And so we'll keep going. Our time's gone today. We got to stop, I'm sure. So I'm sure y'all are tired of hearing me talk, but I can talk forever. Usually it's people grabbing me and dragging me. You just see them come in and drag me off stage here. So that's kind of what happens once they get started talking. So this is style. All my clients retire in style. Oh, by the way, is your retirement account insured? So after you get done with your current sale, that's the question you ask. Oh, by the way.
Lisa, did you have a question? You had your hand up too.
I do.
All right, go.
So are annuities able to be transferred from one company to another?
Yes, they may. Now, there are rules, but we can help you navigate that. Typically, you can't move anything that's less than 3 years old. I think it just recently changed with SILAC to 2 years old. So if you've got something that's 2 years old and not too much of a surrender, we can use a bonus product. Well, when we talk about products or pricing, we'll talk about whether or not a bonus is good or bad. But we can do that. So at least 2 to 3 years old, then we can start looking at it to see if it's a viable option. And then we always have to make sure that it's better for the client. Suitability is the key.
Thank
But
you.
yes.
Wow. Wow.
Mhm. So
Huh.
trust me, there's money everywhere, guys. Just believe it. I need you to believe that there's money everywhere, and I need you to believe that you're the best deal in town to ensure that money and to create income. I tell people I'm only here to ensure the portion of money that you can't afford to lose or to guarantee the income that you can't live without. As a matter of fact, I'm buying a new car, and so I am baiting my salesperson to ask me what I do. And so finally, I'm just talking about things in general. So I talk about, man, it's just so good to be doing what I do right now. I'm so busy because rates are so good. My clients are getting anywhere from 15 to 30% returns with no risk. Well, he's telling me he's thinking about retiring. He's the sales manager of this dealership. I know he's got a lot of money. He just bought his wife a new C8 for her birthday. And so I have baited him enough that he says, hey, I might need to talk to you about some of that. So then when I was back in the showroom the other day, I said, hey, I talked to my wife about that, and we want to talk to you. I said, well, I'm just here to ensure the amount of money you can't afford to lose or to create the income that you can't live without. And then you can play with the rest of the money. You can light cigars with it. I've got you covered on the guaranteed income portion. So he's asking me to meet with him. I'm hoping that he'll let me ride enough to pay for my car.
Shonda asked, what's the difference between a CD and an annuity?
Say that again.
What's the difference between a CD and an annuity?
A CD is the bank, an annuity is the insurance company. Now I have CDs that look like, or an annuity that looks like a CD, like a multi-year guarantee. A CD is a certificate of deposit at a bank. They guarantee you 2% for 2 years or 5% for 60 months, or, you know, it used to be about 1% for 60 months was all you were getting at the bank. Oh, and guess what? At the bank, do you get tax deferral? You do not. That's where you're getting that 1099 for $11.32 on your savings account this year. You know what I'm talking about. Y'all got that. You had to put it on your 1040 this year. You get that 1099 every year from the bank for $4.22.
Yeah.
And they expect that to go on your tax statement or on your 1040. The annuity defers that and gives you a better rate of return. So we get triple compounding. The value of the taxable equivalent yield is huge. So we've got a chart for that. We'll talk about that. If you want to make some notes on some of this stuff, we'll come back and talk about it later. I don't have time today because we're over time. But anyhow.
Man, Rick, thank you so much, man.
Yeah.
Yeah.
Matter of fact, I think I've got to jump off because I've got another training here. So let me jump off here, guys, and I'll go.
Thank you,
and
Rick.
we'll come back. All right.
I'll make
All
sure
right.
you guys all
Hey,
get this.
appreciate you guys.
Thank you.
We'll see you
Thank you,
next
Rick.
week, and I'll do
You too.
better on
Thank
the
you.
training. Okay.
Okay.
Thank
JD.
you.
See ya.
God bless.
All right. See you guys.
I need to stay on too because I have a question for you.
Yeah.
Okay.
And Holly, get my number. Call me a little bit later after my next training. We'll talk on it. Okay. All right. See you guys.
Bye, Rick. Thank you.
See you.
You bet.
Hey, Misty, quick question on annuities. Because I've always been told, and maybe Keith, I think you've written them too as well, is that when someone says, can I move my money? Right. And usually I've been told that if they're currently contributing to their 401k, they cannot move their money, their funds. But he just said that you call the plan administrator.
Yeah, it's just gonna depend on how theirs is set up, like how it's structured and what their rules of engagement are.
Yeah.
Some companies make you be so far vested.
Yeah. Okay.
So is it, question on that same thing. So it's not that they can't move it, it's just moving it without penalty. Is that the case?
That's a great Keith question, because Keith is the expert in this area too. I am just as rookie as you guys are on this.
No
rule or another, call the plan administrator. But what I would say is, this is just my opinion. Why bother with people that are complicated to move? Find people that have stuff that's easy to move. Right? So it's a matter of, do I want to punch down the brick wall or do I want to punch down the styrofoam wall?
Exactly.
People that are easy to move are people who have retirement funds at old jobs. Did you leave an old job and a retirement fund that they're still managing? If the answer is yes, then 99 times out of 100, you can do what's known in insurance as a 1035 exchange. That is maybe the most famous tax code in insurance besides 7702. So you want a 1035 exchange that allows you to just take like to like to like. The rest of it is philosophy. That guy said a bunch of stuff I don't agree with. So, but I'm not him. He's the guru. But again, right? If you're out there trying to help people, my goal, my design is to help people with the shit I know how to do and not I don't, right? So if I run into someone who has a 401k, who's currently actively paying and has a plan, I'm calling that dude. Right. I was going to ask him a question, Misty. I just didn't, which is, do they have an earn as you learn type of thing? Right. I would much rather lay up a plan and for some subject matter expert and collect 20 or 10% than screw it up and get nothing. Especially when, right, I always keep this in the forefront of my mind. When you're playing with someone's retirement, it is their whole entire life. And if you screw it up, God bless you for staying out of court.
Yeah, you will get sued on that one.
So
So you
I-
gotta make
no,
sure you
I don't-
really understand these.
I've written plenty in annuities and I only do them when I'm 1000% sure I have the company behind me telling me I'm doing exactly what I'm supposed to do. I did one for a lady, went to her house probably 20 times, sat with her mother who's 96. We prayed, we read the Bible, we ate dinner. Didn't stop her from complaining to the state of New Jersey about me a year later, after some other person stepped in and said, "Oh, why'd you do this? You should have done this," because he was in financial planning and I'm in insurance. And she took her case to the state of New Jersey. And the companies, both Foresters and Fidelity and Guaranteed Life, fought New Jersey on my behalf. Because they said, look, he did everything he was supposed to. He gave her all the documentation. This is just somebody who's hunting. They even threatened me with a lawsuit. And here we are a year and a half later, no lawsuit, because I cross my I's, I dot my T's, right? If I'm going to screw up final expense, okay, don't seek to do that, but if I'm going to touch somebody's $500,000-$600,000 retirement fund or whatever and move it from one spot to the next, I would just much rather hear you go do it and send me 10%. That 54 grand sounds like really amazing. Now, because you're still on here and you asked me a question, Misty, I'll give you guys who are still here a strategy that Scott Forehand taught me that is fucking phenomenal. The best thing ever. Okay. Number one, what that guy said is, right, I can put in X number in my 401k and then they're matching and blah, de blah, de blah. But there is no tax break. It's called tax deferment. Okay. So I dare you, go look this up. Don't take my word for it. Right now, I dare you. Remember from the former company, I sat on a special team with Mike Resma designing these trainings and plans personally. So I dare you to go look up what's happening with Social Security. Right now, at the bottom of every Social Security letter is an announcement that it's going down over the next 10 years incrementally, right? So that means Social Security is not standing up. Now, why is Social Security not standing up? Because we're not taxing the country enough to stand it up. So what's that going to mean for tax? There's a proposal in the House to raise taxes every year for the next 10 years. Doesn't matter who's president or what kind of bullshit, right? I'm not into any of that stuff. I'm Canadian, I can't vote. But there is a proposal to raise taxes over the next 10 years. So I ask you this. Would you rather pay your taxes now or would you rather pay them 10 years from now? It's either the certainty of now or the uncertainty of 10 years from now. That's what 401k is. Go look it up. It was created by a guy named Ted Bannah, and it was popularized by your favorite actor, Ronald Reagan, in the mid-'80s, as an alternative for people to create retirement wealth. The problem is it was never designed to be as large as it's become. So why is it so popular? Because people work their butt off and they do what their bosses tell them. But why is it not so great? Well, the guy who created it, named it 401k with the government, now denounces it, Ted Bannah, and he supports a thing called the 501k. I put it in the chat earlier, 501k. What's a 501k, right? This is what I used to teach over at Symmetry. Question to you, would you rather buy the car on sale today or would you rather pay full price a few years from now? But Keith, what if I can't afford the car today? Well, if you plan on buying it a few years from now, is it better to get the savings now or not have the savings later? It's likely better to have the savings now unless you just are absolutely sure you just can't afford it, right? So we're not talking about I can't afford it. We're talking about I can get the savings now versus the savings later. Okay, watch how Keith does this. So I run into someone who's 40 who's putting whatever money into any kind of tax-deferred retirement account. And I say to that person, would you rather pay the taxes now on it and make it tax-free, or would you rather have it tax-deferred? Our mind goes tax-deferred because I'm gaining money on the money I deferred, sure. But you don't know what the tax rate is going to be 10 years from now. You don't know what the capital gains interest and tax is going to be. So you don't know what it ends up being. So would you rather have it completely free now, or would you rather pay the taxes later? I hope you don't mind this, Misty. I know you didn't plan
No,
it.
I'm taking notes. Keep going.
It's life insurance 101 or probably 301, but we'll do it anyways, right? So would you rather have the tax deferment and pay the taxes later, or would you rather pay the taxes now? It's like a philosophy thing, right? It's 6 of one, half dozen of the other. Anybody on this call says I'd rather pay them later, right? You better check yourself for having a life insurance license. Why do I say that? Because life insurance is guaranteed money and stocks are non-guaranteed money. That's the whole point of life insurance, guarantees, right? The wealthy, they don't do stocks and shit. They do that with their like miscellaneous money. The wealthy put their money in guaranteed returns. I've got experience with that, but that's neither here nor there. So would you rather pay the taxes now? Would you rather pay them later when you don't know what it is? Here's a bit of trivia. Does anybody know why Ronald Reagan, the man who popularized 401k when he was an actor back in the 30s, only acted half the year?
For tax breaks, because he didn't want to be overtaxed on that income.
Can you be more specific about that?
He was trying to stay under a certain level for a tax bracket, so he wasn't in that next tax tier to get.
So perhaps you've heard me talk about this before or someone else. At 200,000, over 200,000 back then, the tax level jumped to 92%. So Ronald Reagan said, would I rather earn up to 200 grand and take half the year off, or would I rather earn 8 cents on the dollar? He said, I'm taking the year off. Right now, the United States is in the lowest, well, right before this last administration came in, the lowest tax bracket in the history of the country. So are taxes going down, going up, or staying the same?
They're going up.
They're going up.
How do you know?
Because I feel it.
Well, most of the time when inflation goes up, Social Security goes down, health coverage goes down. They're going to have to make it up somewhere, so they make it up in taxes. All right. This is from a movie called The Power of Zero. Go watch it. Okay. So now we have Ronald Reagan. And spoiler alert, Misty, at the end of The Power of Zero, they say you can put your money in 2 things that are tax-free, Roths and participating whole life insurance. That's just a spoiler for the whole hour and a half. But anyways, I digress. Okay. So now Ronald Reagan, the man who popularized 401k, said, I don't want to pay all those taxes. I'd rather be tax-free or not work. Okay, so back to my original question. Would you rather pay taxes now or would you rather pay them later? Who votes for now?
Yeah, no.
Who votes for later? Okay, now in a mathematical comparison, paying the taxes now and using great financial vehicles has been a great predictor for beating taxes later for two reasons. One, because of what he just talked about, right? The up and down of the market. At two, you just don't know what the taxes are going to be later.
Yeah, interest rates are a good example to use on that. Look at housing.
So I would like to have my meal now instead of you. I would like to have my hamburger now while I'm hungry instead of you telling me I'm going to make you the most amazing gourmet burger 3 hours from now. I'm hungry now. Okay, so let's get back to Keith's point. So if I don't put the money in a 401k and I don't tax defer and I pay the taxes now, that is what's called tax-free money. Okay. Let's see if anyone can get this. Why are you in the camp of money certainty? I'll give you a hint. It's not insurance. Why is every single person on this call in the camp of money certainty? It's not insurance.
Because you don't like losing.
You can never have enough money. I mean, I can't.
When it comes to Keith, right, most of my answers, they're never like, you know, feelings. They're scientific. There's a scientific choice that every single one of us on this call have made that bonds us together. I'll tell you. Who on this call is a business owner besides me?
Every single one of you.
Every single one of us. Why are we business owners? Because we want to predict our income. We don't leave it to someone else. So just by choice of life, you've proven that you prefer certainty over turning over control. So if the math works out, right, and there's this guy in Omaha, famous investor, what's his name?
Warren Buffett.
Yes, that's right, Warren Buffett. Go back and look at a bet that Warren Buffett made. It was called he made a 10-year bet with guys that were playing the market. He said, I'll put my money in insurance and you put your money in the market. And 10 years from now, whoever made more wins the bet. And Buffett won the bet. Okay. So
Buffett's heavy in the market too. So
let's go back. Right? Try not to distract the message here, Miss Steve. Let's go back. Hey, Keith is hard on everybody. It's not just the new people. You rather pay the taxes now. You like certainty. Is there a product that you could sell that has certainty and aligns with what you do when you meet with people? Yes or no?
Yes.
What is it called?
An annuity.
No.
Is it the participating whole life?
Yes. Great guess. If you're guessing, it's a participating whole life product. Here's how you sell participating whole life and annuities. But here's how you sell participating whole life all day long. I sold these for breakfast. It's so easy. Okay. Everybody thinks advanced markets are tough and they're hard and they're not easy. But advanced markets are one thing and one thing only. That includes annuities, participating whole life. This is why I don't even sell IULs. I couldn't care any less about an IUL. Because they're one word. So as an Indian, I was born into two things that I'm good at. One is music. Has nothing to do with being Indian. And the other one is math. It's math. It's math. I could draw an illustration for you right now and do the math that will prove, doesn't matter what you do, who you meet with, any person you meet with who wants insurance should look at participating whole life. Every single one. Not a damn one shouldn't. And if they own a business, we're actually doing them an injustice when we don't show it to them. Okay, I'll prove it. Misty, if I asked you to put $10,000 a year into a participating whole life insurance policy, and at the end of 10 years, your cash value equals $100,000, how much did you gain and how much did you lose? Everybody ready? We'll do this math again. If I asked you to put $10,000 a year into a participating whole life insurance, you came to me for life insurance. I discovered that you are putting money in a 401k, you're putting money in savings, you rent homes and you take that rental money. Like, I've run into people with 400 grand in their savings account. And I'm like, what the fuck are you doing? Excuse me. Okay. So if I asked you to put 10,000, this is math, JD, right? You don't need an illustrator for this. If I asked you to put $10,000 a year into a participating whole life insurance policy, and at the end of 10 years, your accessible cash value is 100,000. How much did you gain and how much did you lose?
You didn't gain or lose anything.
So it's equal. Okay. And at that point, when your cash value is 100,000, to guarantee that, right, it's got to be 12 to 20 times. So your death benefit is $2 million. So how much did that $2 million death benefit just cost you?
Nothing.
I'm sorry. Say that again.
Nothing. Yeah.
Hold on. You put $10,000 a year of money you were just putting in a savings account, of money you were just putting into wherever. And after 10 years, you haven't lost anything, you haven't gained anything. In fact, you can get the 100 grand back. And now your death benefit is $2 million. How much did the $2 million cost you?
Not a penny.
Okay. Now let's just assume you take the 100 grand out, take your money back. So, you know, a financial planner is going to say, Kevin, don't talk, right? I see you unmuted. Try not to talk.
I haven't said anything. I was just yawning.
Yeah, okay. I could see it coming. Let's just assume I take the 100 grand out. Do I have to pay it back, Misty?
Yes, but you're paying yourself back.
No, I don't have to pay it back. I never have to pay it back. It's my policy. It's my money. I have to do whatever I want. So if I take the 100 grand back after 10 years, am I even? When I die, are they going to deduct the 100 grand plus whatever little minimum charge every year from it? Of course.
Yeah.
Okay. So it'll be 2 million minus the 100 grand. No big deal. Everybody follow me so far?
Mm-hmm.
So once again, nobody showed. I'm reading something else. It cost me nothing after 10 years. It was money that was sitting around. I got a bigger death benefit that I planned on. And that death benefit didn't cost me anything. Okay. If I take the 100 grand out, what can I buy with it as non-qualified, non-taxable money? Come on, you said the word earlier, Misty.
An annuity.
An annuity.
There you go. And if I drop that annuity somewhere over another 10-year period, what will that become? So in fact, can someone tell me, did I just take found money,
Mm-hmm.
I like that.
buy you the life insurance you came to me for anyways, that cost you nothing, technically, showed you in 10 years how to take that money that you've set aside and now buy another product with it, that at the end of that 10 years will be even more.
Mm-hmm.
Plus, you still have the life insurance benefit you needed. And what did it cost you?
Nothing.
why I don't mess with, don't do your retirement stuff, whatever, whatever. I look for people's money in one place and one place alone. Savings account. Right? It's the same stuff he was saying. What does the money in a savings account do for you? Well, it's guaranteed, so I can walk up to the bank and get it, right? We know that, oh, it might take some time. You can't get the whole thing, blah, blah, blah. And it's pretty much insured, it's about an emergency. So if I could get you the money back in 48, 72 hours like a bank in a state of emergency, would that be good? Yeah, okay. If I could show you 6% interest, because that 100 grand cash value is not going to be 100 grand at the end of the 10 years, right? Remember, there's some interest, right? Forrester's minimum on their participating whole life is 3.5%. So it's some interest. But keep in mind, you didn't look for an investment vehicle. You weren't looking for annuity. You were looking for none of that. You were looking for life insurance. This is why Keith only sells to people looking for life insurance. Because if I'm looking for life insurance and I can show you a product that has this benefit for life insurance, the thing you came to me for, and I helped you uncover the fact that you already had the money sitting around, it becomes a no-brainer. It's literally why systematized, right? Every single one of you could be writing larger premiums. Because systematized of being able to uncover what they have going on and then saying to them, well, you came to me for life insurance. So if I can show you a life insurance product that not only creates a death benefit and basically won't cost you anything, will give you about 6% return annually with a minimum of 3%, so there's no loss there. Also gives you tax breaks. You could take it in and out. It's non-taxable because it's a loan. So with those in and out, you can use it for whatever you want, and is protected from legal liability because it's life insurance. It's not money. So someone comes to sue you, they can't touch it. Who would be the perfect person for this product?
Anybody who has money. Literally.
Maybe there's someone more perfect. Think of a person who, if they came to me for life insurance, would appreciate tax breaks, would appreciate it being protected by legal action, and got basically a life insurance amount that was more than I sought out.
Business owner.
There you go. And who on this call is a business owner?
Every single one of us.
Mm. So it's relatable when you talk to someone. Oh, I'm a business owner as well. And I see the value of parking my money somewhere it's completely guaranteed, like the guy just said. I see the value of getting tax breaks, 162B, and lots of other things I can name for you, right? Forming an S corp, having it pass through. I see the value of legal protection. If they sue my business, they can't touch it. And I see the value of having the life insurance benefit that I came to you in the first place for covered. I mean, no cost. Oh, and by the way, you just went ahead and made a suggestion that if I take the cash value near the end of this, I can take that cash value, buy an annuity with it. So I have a friend who runs a business in New Jersey, and every year the business makes him 30K cash. So what's he doing? He's buying the policy, putting 30 grand as a lump sum once a year payment. By the end of 10 years, he'll have put in 300K, but because he's in his 30s, his cash value at the end of like 15 years skyrockets to like 600 grand. He's going to have this gigantic death benefit. And when he's about in his mid 50s, he's going to take the 600 grand, buy himself a 10-year annuity, which today I was able to show him will return about 1 point something and will guarantee him about 160 something thousand per year for the rest of his life if he does the guaranteed income rider. So basically, for his 30 grand that he wasn't sure what to do with, he bought himself a debt-free life. He bought himself a participating whole life policy. He's lined himself up for an annuity, and I've set him for income for life. Now that's when you get up from the table and you take a bow. Thank you very much. It was all math. There was no selling involved,
Very nice.
but it's system. What did I have to do first, Shonda? I had to get him to buy the strong foundation. Because then I know he qualifies for Foresters, who does the participating whole life policy. And since he's already approved and a member of Foresters, wow, getting you the bigger policy is no problem. That is how you build a system to sell insurance over and over and over and over and over. To me, it's not knowing the most. It's knowing the quickest and easiest path to victory. Now, again, I don't know which company, Misty, Baltimore Life, Prosperity, all these new ones that I haven't spent enough time studying. Which one aligns with what I just said, but if Foresters is on the menu, I'm just doing that.
Lafayette Life, I believe, has participated.
Lafayette Life doesn't have the strong foundation. See, the whole point is they came to you for. I used to sell B leads of mortgage protection, the debt-free life policy, over and over and over. Why? Because they came to me for life insurance. So I could say, first, we're going to put in place this policy and get you approved by this company. And then when it's approved, I'll come back in a few weeks and go over the plan to make you an Uber, Suber, Duber, whatever.
Okay, the situation I have a guy that's perfect for this. And he's already in the Smart Advantage. We did a debt-free life with him. I partnered with Kip Camboy to do that. However, he wasn't happy with the rate of return that he gotten on that. I'm supposed to be meeting with him this week, but Foresters will not do another policy on him until he goes to the doctor. Now he did the paramed, everything came back great. His numbers were awesome, but he hasn't been to the doctor. He's 40. He hasn't been to the doctor since he was like 18, like 20, I think maybe. And he doesn't go to the doctor because he's never sick. But Foresters approved it that one time, even with his numbers coming back great with the paramed, but because he has no medical records for them to pull. So I can't write him with Foresters to do the strong foundation. He had another policy with National Life Group, and so I knew he qualified for, with that. But he.
Shonda, do you want the straight answer, or
yes,
do you want to keep going with the story?
I want a straight answer.
You want a straight answer?
I do.
Okay. Take charge.
Okay. And
what's the guy's name?
Brian.
Brian. Do me a favor. Go to your urgent care today. I'll pay the $90. Have a doctor say you're fine. We'll send him the records.
Okay.
The hell am I missing?
Perfect.
He doesn't want to do it, then clearly you have someone who isn't interested in your leadership. And then it becomes a waste of time. Why was he not happy with the rate of return? Because he probably was sold the policy and not explained the math.
And I asked a question in here. You're doing a one-time premium, lump sum premium payment, not doing the monthly payments?
No, I didn't say that. I talked about my one person.
Okay.
Well, that one person, every situation, every scenario, every bank account, every human being is different. Okay. And the thing that we as a group do ineffectively on an individual basis, I don't know, right? I can't speak to people, but the thing we do ineffectively is we tell. We don't listen. Right? I love some of those sayings. But if someone sits with me and says some of those things, I protect your safety and that's all I do. It's like salesman, right? Usually my first question to my clients is, how's it going? What's on your mind? Then they tell you everything that you need to know. Everything. Or I ask them, listen, before we get to all the financial things, I've got to ask you the most important question of our entire meeting today. Were you happy the Celtics won? Because I can't stand them. Look at the smiles it just put on Tony and Misty. Like, it just took the wall down. Writing more insurance ain't got shit to do with insurance. It has to do with being a human being and breaking the wall down from second one, that I too am a human being. So, I mean, that person who hasn't been to the doctor since he's 18 and doesn't need to go, doesn't need because he's sick. Hey man, you're toying with $1 billion company and we're small potatoes to them. So let me ask you a question. Would it be worth 30 minutes of your time to go into your urgent care, seeing a doctor, using that health insurance that your job pays for? I'll pay the copay just to make sure you're okay. And then we'll send them the thing and they said, you're fine, you're great. Or is it really like too much for you? You're not interested in that. And I totally understand. And I wish you the best. If they trust you, you're their leader. I can't imagine anyone gets a phone call from Misty and it's like, no, I'm going to do this. Does anybody ever tell you, no, I think despite what you're saying to me, I'm going to go this way. And you're like, oh, okay, well, let me figure that out with you. Hell no. And that is the problem by large that life insurance agents suffer from. They think that we have to do sales. They think that we're at their beck and call. And problem is, if we don't write the policy, we're big failures. And the big failure to me is writing some big annuity and getting some $54,000 check and realizing a year later I totally screwed the pooch. I messed it up. I'm super afraid. I've got to go to court. Thank God I have errors and omission. When realistically, what I should be doing is just knocking down final expense after final expense, which is so simple, right? Why are you looking for final expense? Well, I don't want my family to have to pay for my burial expenses. No, I totally get that. If they had to bury you tonight, could they afford it? No, they couldn't. Okay. What kind of funeral do you see yourself having? Do you want roses? Do you want a cremation? Do you want a whatever? You know, the average funeral in the United States done properly is about 10,000. Some people get away with 5,000. Some people like to do the extra thing and do 15,000. Doesn't really matter to me. What matters to me is two things: that you qualify for it and you can afford it. So if I helped you get a burial plan today, a final expense plan that you qualified for and you can afford, is that something we should go ahead and do? Well, I'm shopping around, I'm looking around, I'm talking to a bunch of people. No, I get that, right? We all have the same carriers, they all have the same prices, and basically, what do you want? You want someone who's going to give you a check when you die. Correct? Yeah. Okay. If I told you it would cost a little more to be with the largest private life insurance company in America, who doesn't mess with board of directors, doesn't do a whole lot of like checking, just takes the death certificate and mails you a check, would that make you happier? Is that worth paying a little bit more? No, I want the cheapest. Okay. Because when I did it for my parents, and this is a true story, both of my parents have their plan with the same company, because when they pass away, Keith ain't messing around with waiting for the money and putting it out of his pocket. He just wants to call the company, here's the thing, send me the check. Do you want that? Yes, I do. Okay, great. Coincidentally, that's a company that'll approve us on the spot. So yes, they do cost a little more, but if I can sink that in the hole for you, get it out of the way, and you never have to worry about this again, is that cool? Absolutely. Now, why are they typically doing business with me, Tony? Because I started with the Celtics. I didn't start with like, oh, okay, let's talk about you this and let's talk about you that. Right, that thing we talked about that day, Tony. Be relative, but be firm. Okay, cool. All right, so the largest private insurance company in America that focuses on final expense that will get you approved today and won't give you a hassle when you pass away is called America. Now, coincidentally, it sounds like America, doesn't it? And I believe in America. Ha 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 ha. Okay, cool. So, if I can get you approved with America at a price you can afford, for sure you can get this cheaper, Sean. I'm absolutely positive you can get this cheaper from someone else. In fact, you can have 10 people after we meet calling and telling you that. So if you want the cheapest and you think it's apples for apples, let's save the time and trouble, not even bother. But let me show you America. Let me show you the value of getting approved today. And the next one of these meetings that you're going to have to do when somebody's trying to sell you something, go to the beach, have some clean air. It's on me. All the air you want, I'm buying. Save the time. I'm not sure what I'm missing right now. That paying more for value, no different than the guy just said, is a bad thing. And I'm not sure what I'm missing with any of you that are still on this call, why writing 3 to 5 final expense policies a week is a bad thing. Instead of I got to learn all these companies and I got to learn all this stuff and all this technical and spend my time going through all these different things, right? It's great to have it all available. But what concerns me is how many of you are going to be on this call 6 months from now? Look, I got a guy calling me right now. He says it was a buck dial, but it was an agent from the past. I'll bet you $1,000, Misty, he ain't selling insurance anymore. Why? Because he didn't sell early and he didn't sell often and he didn't make money. So for me, if I'm going to sell early, I'm going to sell often, and I'm going to make money, it's probably going to be water in the desert.
Yeah.
Water in the desert. That's the best product to have a monopoly on and the best place to do it. Or I'm going to get final expense leads. I'm going to understand how to knock it down in 10 minutes and make it such a no-brainer. And I'm going to hang up on people who aren't interested. I don't know why this is such a hard concept to grasp. The final expense market is like a $200 billion market or something ridiculously stupid. I'm going to get final expense leads. I'm going to call people and I'm going to tell them I can get it done now. I can get it done cost effectively. And it's going to cost more because what I don't want for you is to have to, what is your family going to do when they're waiting 3 months to get that burial check? How do they pay for it? Isn't that why we're talking now? Wouldn't you rather pay a little extra and know you can get it quicker? Right? There are people that make 20 grand a month just writing final expense, easy peasy, same system over and over. Same thing with mortgage protection. That was my wheelhouse. But in the end, final expense because they couldn't afford full protection. So I just did math. How much a month is your mortgage? $1,200. Would it help your family if they could pay the mortgage for a year while they try to sell the house and recoup the value? Yes. So if I could get that in place right now, $1,200 a month for a year, $15,000 of coverage, you qualify for it, you know it's going to pay out quickly, and you can afford it. Would that be okay with you? Yeah, that'd be great. Okay, cool. It's a company called America. They'll approve you right here, right now. And we'll know right away. And if you can't qualify for them, they're going to tell us before you spend a dime. We'll know that it's a harder up road, and I'll go find you another company. But at least I can fill this out. There won't be a report. We'll know if you qualify. And yes, it's going to cost a little more than anybody else. But it's the same shit I did for my parents. Because guess what? When they pass away, I don't want to have to be scrounging and scraping and figuring out the money. I just want a company that's like, yeah, we're so rich and wealthy. We charge more because we'll just pay it out. No biggie. How convincing does that sound? Well, I guess I did the training anyways, Misty.
I was just gonna say, Keith, I
Whatever.
think you did a training after, so maybe we'll just, and I'm gonna have to bounce here too, because I have another meeting. And
Yeah,
then
me too.
I need to get with you quick, JD, first, because I know you needed a minute. I didn't forget.
Hopefully that was valuable and I didn't
That
hold
was.
the
I
hostage.
took a whole other page of notes, so that means it was definitely of value.
Happy to teach it to the team. It's just, how many of you are still going to be on this team 3 months from now? Ask yourself that. And
Right here, man.
okay,
Guaranteed.
great. If you are, there's only one way to prove it. It ain't got nothing to do with putting your hand up. Because 3 months from now, if you haven't made a dime, tell me again if you're going to be on this team.
Amen.
All right, guys. I will see the rest of you at the board. JD, hang
Thanks,
out.
Keith. Have a good day.
Later.
Bye. Bye, everyone.
Bye, guys.
Yeah, I was thinking the same thing that Keith ended up doing his trading anyway.
Yeah. All right. So
Oh,
what do you
that's
have for me?
I mean, he just hit on my question because I've got I mean, every policy that shows in the toolkit that he qualifies for is all graded. And Corebridge, Gerber are the two that I'm really looking at for guaranteed issue because they're probably the best price, even Great Western. But Americo is it's the one that's guaranteed he can afford, that's going to pay out what he needs, but we don't have that one yet. So I guess that's my
You can get
my
America
question here.
through Levinson if you're outside that window or you got the release. You can get it through Levinson.
Okay.
That one is because Jason does have it through Levinson, and I kept it there at Levinson because I was afraid if we yanked it that America may make Jason wait 6 months, which would make everybody have to wait.
Yeah,
So I just kept it there. I'm like, just leave it.
Okay, I'll send it to them because I'm pretty sure I'm outside of 3 months for sure with them. So
Okay.
I'll reach out to them. That was really my only question, my main question. And but I'm not in AIG, so I think I'm waiting for them. The Sure LC sitting there waiting. Great Western, which I know they're going away, but that was another option.
You can still write them till August 1st. I think up until the end of July. I think I got to go back and look at the email. I think maybe at the end of June or the end of July, they're going to stop paying advanced, but you can submit all the way till August 1st. But I think it's the end of June they're going to stop paying advanced.
What company was that?
As earned.
Great Western.
So I don't have a login with them
With Great
at
Western.
all. Yeah, I mean,
so go back
looking
to
at my
your
Sure
welcome
LC,
email.
I'm good.
See if I have your welcome email. Sometimes I get them, sometimes I don't. Your GTL, Baltimore, Gerber. I don't have that welcome email for you, but you should be able to go on and register, and then it'll create a login for you. Let me see if I can grab the Great Western link and put in the chat for you quick.
I've got it here, apply.myenroller.com.
Yep, that's it.
Well, I'll play around with this, and if I have some more trouble, I'll ask for your help again, because I thought I tried to do this and I could never get the email sent to me. I'll play around with Great Western again.
Okay.
See what I can figure out.
Yeah, they're easy, and they pay
Okay.
pretty quick too. So.
Yeah, got it. Okay, so as far as Levinson, just reach out to them, and for Americo, are they turning around pretty quick on?
So usually once you you can go right on and you can hit there's
do a request.
Yep, go to that same request link that you had and you just request
Okay.
Americo. And then they'll send you the Sure LC like right away, then crank that out. And then, yeah, they're pretty quick. Like Jason
Okay.
got his back, I think within like a day or two.
Got it. Okay.
Perfect.
Will do. That's the one he wants. So that's the one I'm gonna sign him up for.
Perfect.
Okay.
Sounds like
All right.
plan.
Appreciate it.
See you, Shonda. What did you need, huh?
Okay.
Okay, so I have a few questions. They did put me on as earned with I know with UHL for sure. So I'm guessing that's probably going to be with the rest of them too. He said he wasn't going to, but he probably got pissed off when he saw that 10G. But I don't know what to do with this guy. Is that when you said that I could probably get those carriers sooner? Because now Americo is paid off. I'm getting ready to pay Mutual of Omaha off. I brought myself another 30 days with UHL. They said I could make monthly payments. I was going to just, because I'm trying to really get Foresters taken care of because I need those carriers here. So how do I get them to release me if I don't have a balance with them? Instead of
So
holding me for
even
that.
if they release you, sometimes even with the release, that you got to remember, Adam keeps going over this, the insurance carriers still have their rules. If you wrote with
Okay.
them, you're not going to be able to get them right back. It's
Now,
the
does he have Tennessee?
he does
with
have
America?
Tennessee. Yeah,
So I really have to,
yeah, he's got Tennessee. So
and with Lafayette Life too, right?
yep. So you got to remember, any carrier you have, like Jason has to have every carrier. So if we have it available, Jason has it because he has to. You guys can't have what he doesn't have. And he has most of the states. He's in over 20 states, so he has almost all the states that our agents are in for that reason.
Okay. So I may have you guys do. Can you do a quote, or do I need
You have
to
to
call
quote it.
him?
Like he's not going to do all the
Well,
work.
I mean, I'm saying, do I have to? He's going to have to go fully underwritten if he's wanting 500,000.
Yeah, he's gonna have to. Girl, I have to jump off though because I'm supposed to be on another one with Mark Williamson right now. He just texted me and
Okay.
like I'm ready, and I'm like, hold on, and he's like, I'm on a tight schedule, so I have to get on this.
Okay.
Wasn't
We'll
expecting.
talk later.
I'll get with you tonight. Okay, sorry,
Yeah.
bye.